Hi, this is Jitendra Gupta. Today I am going to talk about Q3 FY19 earnings review of JSW Steel. Overall, the company reported close to 10% decline in its consolidated net profit on a year-on-year basis, and that was despite increase in sales volume and better margins. What led to this decline is primarily its organic and inorganic initiatives that the company has pursued in the recent past has started putting pressure in terms of the higher expenses. In fact, some of its recently acquired assets have reported losses, and that is putting pressure on the overall profitability. So what are the key highlights of this quarter? The sales growth was ahead of expectations. The company reported almost 11% growth in sales, and that was despite a decline in overall sales volume. And what led to this growth in sales was largely because of the improvement in realizations. During the quarter, the company reported realizations of almost 50,000 rupees a ton. Those were up by almost 18% on a year-on-year basis. Second, the company maintained strong operational performance. We saw almost 6 to 7% increase in its key raw material prices like iron ore and coal. Despite that, because of the higher raw material prices, the company was able to contain those pressure and maintain its margin. In fact, the margins have grown during the quarter, and that is largely because, as I said, realizations were better in this particular quarter. Now, talking about the outlook, volume growth is expected to be strong on the back of contribution from recently acquired assets and ramp up of production in various facilities. The company expects to maintain its volume guidance for the current financial year. However, there is a risk to earnings because of the volatility in the international steel prices. The company has been saying that the steel prices are bottoming out, but because of the concerns over the Chinese inventory and global growth slowing down, as well as because of the trade tension between the countries, there could be an impact on international steel prices, and thus that could impact its overall earnings growth going forward. To sum it up, movement of international steel prices would be critical. Investors should also closely watch the ramp up of production and the turnaround of some of its recently acquired assets. In terms of valuations, at about 280 rupees at current market price, it is trading at about 9 times its FY20 estimated earnings, which is quite reasonable.